Welcome to Childcare Rockstar Radio. I am your host, Kris Murray. Childcare leaders around the globe are breaking through challenges, leading the way in innovation, testing new best practices, and impacting children and families in a much more powerful and positive way than ever before. Each week, join me for interviews with early childhood leaders and experts that will leave you inspired to become the next childcare rockstar. Now, let's go. This is Childcare Rockstar Radio, episode 165, featuring Jessica Ferguson. Well, you're here, I'm here, and I'm thrilled that you're here with me today on the podcast. This is our new studio. I'm back in the home office and have decorated my background to have a little bit of branding. We closed down the Carbondale podcast studio a couple months ago. Just weren't using it a lot, and we've moved everything here. And so I'm very, very excited to be coming to you today via YouTube or the podcast platform that you listen on. If you do want to see the visual version, check us out on YouTube, but happy to be in your ear via your podcast app as well. Today's episode is sponsored in part by Peanut Butter and Jelly TV, otherwise known as PB&J. Whether you currently stream or are interested in video streaming to your families, PB&J TV has developed an entirely new way for preschools to engage families through their video streaming platform. Introducing PB&J TV's event streaming. And for those of you who are current streamers, you likely have a set number of logins per day, but with PB&J TV, you can schedule fun events for parents to tune into. Instead of randomized logins throughout the day, what if instead you schedule circle time viewing at 9 or Dino Dig Up viewing at 2 o'clock? Parents will receive an in-app client invite, an alert to tune into those captivating moments for a few minutes and check out all the action. So it's a much cooler way to choreograph the experience for parents to be coming in and streaming on events versus just randomized. Think of it like the Snapchat of the childcare industry. If you're not yet a streamer, PB&J TV has a comprehensive administration program to better manage your school with robust streaming and AI technology. And you can check out their latest releases in gun threat and unattended child AI. A ton of resources over there and all the latest and greatest tech at peanutbutterandjellytv.com. That's all spelled out, peanutbutterandjellytv.com. Thanks, guys. So today's guest, Jessica Ferguson, is with Live Oak Bank, and this bank has done some of the most childcare loans in the industry of all banks that work with SBA programs. So they are affiliated with all the SBA programs, including 7A and 504, as well as a new kind of loan that we talk about on the podcast. So you're definitely going to want to stay tuned in here for this episode because there are chock full of tips, strategies, and the latest and greatest for what's going on in the financial and funding market for you, for your school expansion, or for a capital improvement to your schools. You're definitely going to want to listen to this episode with Jessica. We talk about SBA versus non-SBA options and what the current interest rates are looking like, how important it is to understand your P&Ls and have current P&Ls as well as free cash flow reports and balance sheets and all of those good things that you need so that you can be financially successful and understand where your money's going and where you're headed. So we talk all about that on this episode. If you're listening live, this is early December 2023, and I am getting ready for a relaxing holiday season. I've got my kids joining me, both of my adult children. Maeve is coming back from college, and she's having an amazing experience at Savannah College of Art and Design. I'm a huge fan of that school if you're considering that for your child. And Owen is working in Wyoming and doing great and making good money as a diesel mechanic and enjoying life out in the wilderness areas of Wyoming. So all is well here. I am getting ready to go on a cruise. So for those of you that are going on the Virgin Voyages CEO cruise with myself, hosted by one of our coaches, Miss the amazing Tamina Adams, and Coach Jay and Coach Jody and Jennifer Connor and myself will all be on that cruise. And we look forward to seeing you there. So hopefully you're booked and you got your sailor hat on and you're ready to go, because I am currently packing my bags as we speak and getting all of my scarlet and red outfits together and bathing suits and cover-ups and hats for an amazing cruise experience to the Bahamas and Dominican Republic for a 5-day cruise out of Miami. So, and then I'm going to just be home and kind of relaxing and doing Christmas stuff and wrapping gifts and cooking and all of those fun things that we like to do at the holidays. So I hope that you're having a stress-free as much as possible holiday season right now. I hope that you aren't having any sadness or trauma or hard times. A lot of us do here around the holiday season. And if you are, just know that I am coming to you, to your heart and to your head with hopefully some comfort. Just to let you know, we got you, and we look forward to getting to know you better. If you want to reach out to me anytime, I am still available and reading all my email at kris@childcaresuccess.com. Feel free to reach out. Let us know if you have any ideas and suggestions for the podcast for 2024. Any guests that you know of in the ECE industry that you think would be a great addition to the podcast, and any topics that you would like to see covered again or in more depth as we roll on towards episode 200 here at the podcast. So that's all I wanted to share, I think, today. I hope that you have a great holiday season. We are still doing this podcast every other week and continue to do so. Have no plans to change it in 2024. And I would like to actually do maybe some more short, quick episodes for you as well. Some more lunch and learns, which are usually about 15 or 20-minute episodes for you to ingest over your lunch break and continue to stay on top of what's shaking and what's happening, what's developing as best practices, latest strategies, fresh ideas for growing your childcare business into and beyond 2024. So wishing you all the best, and we'll continue to produce episodes here, and hopefully that you'll come along with the ride with us, because I don't want to lose you. And please do pass this podcast along to any friends and family that you think would enjoy listening to it. Always would appreciate your referrals. All right, everybody. With all of that said, I'm going to dive into today's episode, the meat of our interview with Jessica Ferguson, a very sharp young lady serving the ECE industry in lending and financing from Live Oak Bank. Let's go. Hey, everybody. Welcome back to the podcast. I am thrilled to have you here. And this is going to be a juicy episode that you need to have in your arsenal of tools when it comes to financial success. I want you to meet Jessica Ferguson with Live Oak Bank. Jessica, how are you?
I'm doing great. Thanks, Kris. How are you?
Doing fantastic. And we are both coming to you from Colorado, yes?
Yes, I'm in Denver, Colorado, and we're having a lingering late summer fall day here, sunny and in the 70s. So no complaints.
Nice. Love it. Love it. Tell us a little bit more, Jessica, about what you do and how you help early learning owners, early education companies.
Sure. So I spearhead our early education vertical at Live Oak Bank. We are the nation's largest SBA lender. We're headquartered in Wilmington, North Carolina, and our business model is unique in that we find particular industries that we like, and we'll lend exclusively in those industries, but we lend nationwide. So as I mentioned, our vertical is early education. So myself and the team are lending to preschool owners. These are for-profit, private pay preschools all across the country. And we'll do a combination of some SBA lending as well as some conventional lending. to help them support their growth goals, construction, refinance, a pretty broad use we can help them with.
Awesome. And your company, Live Oak Bank, has also worked in other verticals, right? So you guys have a lot of experience helping other kinds of businesses as well. Tell us a little bit more about those verticals.
Yeah, exactly. We are now up to about 35 different verticals, but the bank started lending exclusively to veterinarians. So we were dubbed the doggy bank at origination. But again, it kind of came down to this model of let's find industries that we like, that have performed well through recessions, that have good repayment history, and also, maybe who don't have the most robust personal financial statements. So just really good borrowers that fit with SBA programs. So started again with veterinarians, do a lot with dentists, investment advisors, self-storage, other franchise concepts. Again, up to 35 different industries. So we've really grown in quite a short amount of time. And as mentioned, are the nation's largest SBA lender. So that's kind of our bread and butter is helping small business owners.
Love that. Tell us a little bit about your home life. What do you like to do in your personal time? Any hobbies, and what's going on with Jessica at home?
Yeah, well, as somebody who lives in Colorado, it's probably a bit of a cliche, but it's true. I love hiking and skiing. It's a beautiful state here, as you know well. So try to, when I'm not, working, trying to get out and enjoy the great outdoors. Did a whitewater rafting trip this year, which was a lot of fun. I have a dog bear, and she goes with me everywhere. And
Nice.
yeah.
Well, maybe Bear and Ruby, my dog, will get to hang out one of these times.
We would love that. She's very easy to get along with. So
Nice.
Yeah, let's make that happen.
Yeah, let's do that. And what is a fun fact about you that not that many people know?
I would say that I've lived abroad, both in Spain and Argentina. I went to Spain as part of a study abroad program and really just fell in love with living in a country that spoke a different language, being, in a place where you could travel so easily and, experiencing a different culture. So after I graduated, I made the decision, much against the wish of my parents, to move abroad and lived in Argentina for a year. And it was a fantastic experience for anybody who's never been to South America. I highly, highly recommend it.
Nice. Love that. So tell us a little bit about the latest in the world of lending. What are some trends or some things that you're seeing with regard to early education, early childhood businesses? Are there any trends or things that you're seeing that people, the audience, should be aware of?
Yeah, for sure. I think it is a ripe time for acquisition opportunity. I think we're experiencing a period where you've got a lot of owners who have been at this for maybe 20, 30 years, and, then had to deal with COVID, which was so stressful, and then tack on just the shortage in teachers and how difficult it's been to hire and retain staff. And so there's a lot of folks in the industry, I think, who are just a bit burnt out and ready to exit. So we've seen a lot of borrowers who've been able to acquire schools that are in their community, where again, that seller was just ready to exit the space. I'd say that's been one of the major ones.
Cool. Let's talk about the different types of loan programs that you offer. So take us through, I guess, some of the classic SBA programs. I mean, I'm familiar with the 504 and the 7A. Some of the listeners may be familiar. Some of them may not know anything about SBA. So let's just talk first through that. What are the most common programs or products that you work with, and what are the different distinctions of why these things are, what are they for?
Sure. Yeah. So SBA has two major programs, the 7A loan and the 504 loan that you mentioned. I'll start with the 7A loan just because it's really the most versatile loan, and it's the one we do the most of. Most versatile, meaning it can be used for a variety of purposes. So we can fund real estate. Let's say you're renting your building and you have the opportunity to buy it. We could use the 7A for that. It can be used for construction, whether that's leasehold or whether you own the building. It can be used for acquisition opportunities. Again, if you wanted to buy maybe your competitor down the road for working capital to refinance. So again, just a really easy loan product.
Mm-hmm.
The terms on it are it's 10 years if there's no commercial real estate involved. And then if there is commercial real estate involved or construction and you own the land, then we can go out to 25 years.
Okay.
The
Awesome.
504 loan is a little more restrictive in its use. So it has to be for hard costs. And we deem hard costs to be anything related to land or construction and occasional refinance. So again, if you wanted to buy land or do construction, this is the product we would use. We could use. We actually also do 7A a lot for those uses as well. And not to get too much in the weeds, but there's also a 504 green product. And this is just, again, allowing for some type of environmental enhancement. So normally owners will put solar panels on their building, and you're going to go 504 green if you're in a situation where maybe you're maxed out on your SBA runway. So it allows us to again, extend additional dollars for somebody who maybe already has a 7A loan out there that they don't want to refinance.
Okay, that's cool. I didn't know about the green product. That's awesome.
Yeah, it's again a great way for maybe if you already have one or two schools, for you to be able to do an additional school, and we can finance the land and the construction. And you get a 25-year term. Interest rates are pretty attractive on that as well.
All right. Well, we're going to talk about interest rates here in a minute. Tell us a little bit about your more conventional non-SBA lending options or programs.
Yeah. So conventional really can be used for anything. A lot of times we'll look at this product again, if it's somebody might be maxed out of SBA runway, or maybe they're too strong. So there are certain, if you have a extremely high net worth, then maybe you would, kind of place out of an SBA loan. Or maybe it's somebody who has a couple of schools and they just say, I just prefer conventional. We might be able to look at that. With conventional, there typically is a shorter term and amortization than if you go an SBA route. So if there is real estate, you're likely going to see a 20-year term and amortization. And then if there's no real estate with a conventional loan, you're likely looking at a 5 or 7 year term and amortization.
Okay.
And conventional loans can be, they can include a balloon payment or certain covenants, which again are not allowed in an SBA loan. So typically, again, conventional is for stronger opportunities.
A question that I get a lot is, are you going to be able to help people across all the 50 states? And because you're based in Colorado, but I know your bank, it was originated in North Carolina. That's what you said, right? Mm-hmm. So does it matter where you live? Are there geographic contingencies or differences across the United States?
No, we lend in all 50 states. So we are open for business. Haven't done a loan in Alaska yet, at least in the early education vertical. I know the bank has, but yeah, we'll go anywhere from Florida to Washington, New York. So yes, do not let that deter you from reaching out to us, even though we're headquartered in Wilmington, North Carolina.
Okay, cool. So the 7A is the most versatile. And in terms of the best ways to use these different programs, you gave some examples. Are there any nuances in terms of restrictions around not being able to use the 7A in certain instances, or just like, are there any rules of thumb for how to, what scenarios fit best for which, or should people just contact you and then you can guide them through their situation?
Yeah. So, I mean, of course, always here to be used as a resource. So please don't hesitate to reach out. Again, with 7A, it is very versatile. So I'd say probably the biggest thing that might prevent us from going down that route would just be if somebody already has an existing SBA 7A loan. You generally reach your cap once you have about 5 million out in SBA 7A. But again, that could be something too, where we look at maybe refinancing your existing loan, and then that frees you up for some additional SBA 7A runway. One thing that I love about Live Oak is we always say, we do weird well. So we always try to come up with creative solutions. So one example is, let's say you have a little bit of SBA runway left, but not the full amount needed. We might be able to do a reduced guarantee, which doesn't mean anything different for the borrower. It really is just the bank takes on a little bit more risk, because if the loan were to go bad, rather than the bank recouping 75% of the guarantee from SBA, we might be getting 55%, for example. So again, we take everybody's situation and, try to come up with a creative solution, and can kind of work around, whatever, whatever their situation is.
Mm-hmm. Okay. So let's talk about interest rates. You mentioned, what are some typical rates for these different products right now? Obviously, we keep hearing all over the media and the news about rate increases, and we're about to potentially go into another one from the Federal Reserve. So what are rates looking like for you right now? And I'm sure it depends on the situation, but just give us a guideline.
Yeah, so all SBA loans are based off of Wall Street Journal Prime plus a spread. Right now, Wall Street Journal Prime is 850. So again, unfortunately, a bit high, especially compared to where it has been when it was, 3 and change not too long ago. So we are optimistic that rates could actually start falling by middle of next year. Again, nobody has the certainty or the crystal ball. There's a lot of macro factors like inflation, unemployment, what's going on overseas in Ukraine and Israel. So it's a bit of a wait and see, but again, we watch a lot of different outlets that are predicting that they could start falling next year. So one thing we have also seen is a lot of borrowers electing a variable interest rate right now versus a fixed interest rate. And the benefit is if you go variable and then rates start falling next summer, you get to kind of ride that down. So you'll see your rate actually decline, versus if you elect a fixed rate and you lock in at the height of the interest rate market, and then rates do start coming down, you unfortunately again are locked into that higher interest rate. So again, there's options, and happy to talk through each person's specific situation. And again, some people just really want that certainty of knowing I don't have to worry about the rate changing. Other people, again, if they think rates are coming down, they probably are going to be a little more prone to going with a variable rate.
Yeah. Cool. So I want to talk a little bit about analyzing potential deals, because I feel like you might be coming in and as an advisor and helping people a little bit. You see deals and you see people's, analysis methods when they're going into it. And so I wanted just to kind of get some tips from you, or, guidance of what you're seeing in the early learning field around how people enter a deal, whether it's to buy, to expand, to build from dirt, buy a competitor, et cetera, or sell. And so give us a little bit of, guidance here on what should people be looking at in terms of how should they be analyzing or looking at a deal that sometimes you see might be a gap in how our industry thinks about themselves as potential deal makers? Because I know a lot of our folks are very risk averse in general, maybe compared to other verticals, maybe not. But I am just curious about what you're seeing in terms of how they approach deals and how they analyze deals.
Yeah, yeah. So, we really are going to be looking at the cash flow of a business. So to us, we don't care so much about collateral. It's really, do we think that the business can generate enough free cash flow, to pay the owner what it needs to live off of and then pay the bank back? So in order to look at cash flow, we're looking at what's your top line revenue and what are your expenses. So when it comes to revenue, we're going to get copies of a occupancy report. So if your school's licensed for 120 kids and there's only 40 in there, why is that? So, again, in a perfect world, you're buying a school that's got healthy enrollment and healthy tuition prices as well. It's a little tougher when you're looking at a deal and maybe the seller hasn't raised tuition in the last 5 years. And so the new owner is going to have to come in and increase tuition 15 or 20% to bring it up just to parity with the market. And,
Right.
that can be an uncomfortable position. Hey, I'm stepping in, I'm new. And by the way, your tuition's, going to increase 20%. So
Mm-hmm.
that's something we're looking at. And again, we also do recognize that they're also, while lower enrollment isn't a great thing, it also can be a good opportunity. So maybe you can pick up a school for a pretty attractive purchase price if the enrollment's low, but this new owner knows the market, knows there's demand. Maybe the seller just hasn't, put their foot on the gas. So we can certainly, again, look at opportunities, even if the enrollment isn't exactly where it should be. So that's kind of on the revenue side. And then
Okay.
on the expenses side, obviously we want to see, just how the business is being run. Typically we see payroll as roughly 45% of revenue. So that's one metric that we might look at just to see if that seems to be in line. And obviously how they're handling all of their other expenses. But ideally, we want to get to a place where once we're looking at the EBITDA, it's the earnings before interest, tax, depreciation, and amortization, is at a place where, again, it can service the debt. So those
Right.
are a couple points there.
Okay. So, and the distinction between a regular P&L or financial statement and the EBITDA at the bottom line and a cash flow report, I just want to make too, because sometimes people, if your tuition is only being collected monthly and then you have big expenses at the last week of the month, you might have a cash flow crunch in the fourth week every month. And so even by changing the way that you collect tuition, could potentially improve your cash flow. So not just looking at your P&L, guys, but looking at your cash flow reporting of when the money's coming in and when it's flowing out. So you can figure out when your tight spots are going to be and when your loan payment is due.
Yeah.
Just something like.
That's a great point. I think, again, we can also try to collect financials for, monthly financials. So it helps us to see, okay, maybe this was a month that had payroll that hit 3 times versus 2.
Yes.
For example, just to, again, get a clearer picture. And that's also the nice thing of working with a bank that really knows the industry is, we kind of know what to look for, and that makes sense, right? Okay, well, I had payroll 3 times, but maybe I have parents who only pay me once a month. So there can be those little windows where you get squeezed a little more. And we can kind of decipher those probably better than just, kind of more of a generalist lender who looks at all different types of industries.
Yeah. Well, I like that Live Oak has specialized in the veterinary and, either dog daycare, dentists. These are all types of businesses that are generally stable and they're all caring type
Yeah.
businesses. They're businesses that care for either animals or humans or, teeth or, they're all
Yeah.
actually pretty similar when you look at the types of businesses. So that's cool. I like that you guys specialize in that. So what scenarios make the most sense in using these loans for growth or expansion? So I think you kind of covered that already. And it sounds like, definitely the 7A is the most flexible, but in some cases, the 504 could be really good for growth or expansion as well. And then the green product as well.
Yeah, and what we'll do a lot of times too is work with a borrower and show them, both options side by side. So, if you want to go the 7A route, this is what, your term rate, monthly payment would look like, the pros and cons. And then if you go the 504 route. So just again, people, because everybody has different priorities. Some people might really care about, I just want the lowest possible interest rate. So maybe 504 would be better, but then, a 7A, it's just a smoother, quicker, cleaner process. Everything gets done internally. We don't have to go for approval at SBA like you do with the 504 loans. So, sometimes the benefit there is more important of just, I want certainty and I want to be able to close quickly. So, again, knowing what each person's priorities are, it helps us, again, work with that borrower to make sure that we're putting them in the right product.
And then do you guys have any partnerships with other service providers like insurance companies that, because you as a lender want to make sure that also the borrower has the right kinds of insurance in place to protect them, right?
Right.
So do you kind of help on that front, or you just recommend, or do people usually have their own that they prefer? How do you work with other vendors out there?
Yeah. It really depends. I would say when people are coming to us for an expansion, they typically already have their life insurance agent or their insurance agent in place. So we're happy to work with whoever, they want to use, but maybe it's a startup opportunity, or they just want to try somebody new, then yeah, again, we've got some great resources just because we do so many of these types of loans. This year we'll probably close 130 million in early childhood education loans. So
Wow.
we've got a couple of vendors that, again, we've worked with, and can offer up some recommendations to folks.
Nice. Love that. What kind of challenges are you seeing in terms of childcare owners when it comes to financial management? Obviously, we've been talking about having their P&Ls current, having their cash flow reports potentially, other best practices that sometimes you see there's a gap in what you would like them to have in terms of documentation or preparation versus what they have. Anything you
Yeah.
can.
Yeah, for sure. I would say, one big thing is trying to keep clean clean P&Ls as far as not running a lot of personal expenses through the business,
Yeah.
especially again if you're trying to go out and get financing. Obviously you want to show the bank, hey, I do a really good job at running my business. And when you run personal expenses through the business, it's just often hard for us to verify those as add backs. And so your cash flow is going to look, worse than it really is, just because we unfortunately don't have a great way of proving, hey, when I went to Costco, half of that order or half of that purchase was really just for me personally. So
Right.
it's gonna look like, the school took up the whole Costco purchase in this
Right.
example. So
Right.
that's one. I would also say, just again, I know I mentioned this a little earlier, but being disciplined about tuition increases is really important. It's helpful when we see a school that, every year they did their 5% tuition increase. So again, if it's a new owner, you're not having to come in and, jack up tuition just to again make the numbers work. Also want to make sure that owners aren't propping up their payroll with grants. So, the past couple years, there's been a lot of grants and subsidy money out there, which is great and was, much needed, much deserved. But we don't, it's tough if you get into a situation where you didn't raise your tuition, but you were paying all of your teachers, a higher wage because you're paying them with, subsidy or grant money. And then once that grant money is gone, you're now in a tough situation where you're again going to have to drastically increase your tuition prices to be able to cover your teacher salary, because you can't go from, paying a teacher $18 an hour back to $15 an hour just because the grant money went away.
Yeah.
So that's another thing that we typically look for.
Yep. So we are coming to a close on this podcast. This has been amazing information, Jessica. Any other final thoughts? And what are you looking forward to in the coming year in 2024? Any bright spots on the horizon, personally or professionally?
Yeah. So for final thoughts, I would just ask folks to use myself, my team as a resource anytime you're looking at a potential opportunity. Whether or not it makes sense. Again, happy to be used as a resource. I think the SBA product, sometimes it can get a bad rap. You do have to provide a lot of documents, but it's also great that, especially for expansion opportunities, a lot of times you really don't have to put very much money down. So, we oftentimes talk to folks that are surprised that their equity injection can be as low as it is. And I think, again, it's just, I think 2024 will be a pretty great year for opportunity if you do want to expand. I think, if you're active in working with a broker or even just kind of calling on some of your local competitors, you might, find some opportunity there to pick up a school. And it can be a great way to, again, kind of gain some efficiencies if you've got two schools versus one and being able to share staff. So those are kind of some final thoughts. And then I'd say as far as what I'm looking forward to in 2024, professionally, hopefully it's interest rates coming down. So
Here. Absolutely.
I've got my fingers crossed. I think that would be great to see. And then personally, I am going to Europe to visit actually a good friend from my Argentina days who has since moved to France. So I'm
Wow.
yeah,
Fun.
go see her and meet her son. And it's been way too many years since were last together. So we'll have a glass of wine or two in France. And
Nice.
that sounds pretty nice right now.
Yeah, that sounds really good. And please give us your contact information. How can people find you and reach you?
Yeah, of course. So if you go to Live Oak's website, it's liveoak.bank. You can navigate to our early childhood education landing page. My information, as well as the 3 lenders who work on my team. All of our contact information is listed there. My email is jessica.ferguson@liveoak.bank. Welcome to email me directly as well.
Awesome. We'll put that in the show notes too.
Okay, perfect.
Love it. Well, thank you, Jessica, for being with us today and coming back to best practices in the world of lending and borrowing, guys, and financial preparation for taking your business to the next level. And I am very excited about what we have in store for us potentially in 2024. And hopefully the interest rates will come down. I am not going to be borrowing for my business, but I have a lot of real estate loans and potential refining that I need to do, Jessica. So I'm fingers crossed about that as well, but we will see where that all goes. And no one knows, as you said, we can shake our magic 8 balls, but that's about the best we can do.
Yeah, exactly. Well, I've got my fingers crossed here too. And thank you so much for the time. This was such a pleasure on my end, and would love to help support owners out there and whatever their financial goals are and help them get to where they want to go. So
awesome. Thank you so much. Thanks everybody for tuning in, and we'll talk to you next time. Take care and God bless. Bye-bye.
Great. Thank you.
I hope you liked this episode of Childcare Rockstar Radio. If you did, Please share it with someone you know and help spread the word to your friends in our industry and on social media. Childcare business success is my passion, and I'm honored to be on this journey with you. As a thank you for listening, learn more about how to grow your business and make more income with our brand new free quiz, the What's My Number One Income Killer quiz, exclusively for preschool and childcare owners. Take the quiz today at childcarequiz.com to discover what your number one income killer is and how to solve it. Take care and God bless.